So let's start this panel. The choice is ours. The choice is in the economic world. Please join me. Marco, Nick, Bertrand, Paul, all these wonderful men with me. I don't know if, Marco, you just want to say some few words after. I mean, the film spoke very loudly, I have to say. But if you want to just comment briefly, and then we start with a conversation on the finance and on what we can do. I mean, I'm an economist myself, and I've been hearing about externalities since I was in college. In fact, I wrote my college thesis on Pigou. Pigou was the economist who, talked about externalities at the end of the century, at the beginning of the 20th century. And I'm just giving you the floor in 1 sec, but two things I want to start this conversation with. I am old enough to have witnessed a lot of the processes that went through in the global multilateral arena. I was in '92 in Rio de Janeiro, heading the Italian delegation, where the climate negotiations started, where the biodiversity conversation started. So it's what now, 35 years. We lost a lot of time. And the reason why, and this is why I met Nick some years ago, I was really attracted by the way after the financial crisis, because that is really a turning point, I think, when we realized that finance was not working for the economy, and it was working for itself. Finance has not been a good force in doing these transitions, and I think I want the help of all of you to sort of go in depth into that. And for me, it was extremely important in 2009 when I discovered that there was a reaction to the big crisis in 2008 and 9, and it also came from the financial world. And I don't want to be long on that, but the movement that started with Sir Ronnie Cohen, with Nick, with myself, and with many people around the world, and with all of you, talking impact investment, talking measuring. This film, so I'll give you the word on this, please. This film ends up with a very clear notion that we need to measure destruction and positive and negative impact. And if we don't measure, if business is not, and finance, not only business, not only entrepreneurs, but finance are not accountable for the value, a very critical and very strong moment of this film for me was when you mentioned the fact that we value nature when it's dead. We value nature when it's gone. So we don't really value it. That's not the kind of value. So I think there's a huge philosophical, economical, and political theme if we want to really make this pace more, we don't have other 30 years. And if we want to be faster. And so the issue of how we measure value, how this comes into the decisions of finance and business is really crucial. That's my introduction point to this panel. And Marco, please.
No, thank you. Thank you so much, first of all, for having the screening here. But you already summarized very well what I wanted to say. One thing I wanted to say, though, I think Sarah is still here, but when Sarah told all of you, enjoy the movie, well, this is not a movie to enjoy, really. This is a movie I hope to reflect on, because I think one of the problems that we're having is that we live, many of us live so far from nature. Then on one hand, we don't understand the dependencies and how much nature provides to us every day, not just in biological terms, but everything that we see around us, everything that we live in, comes from nature, somewhere from nature. And that coming somewhere from nature have an impact today on nature. And that's how we wanted to show strong graphic images of destruction, because many people just do not make that connection that easily, because we live so isolated from nature. That's one point. The second point is that the movie would like to highlight what we said in the film, the extraordinary times we live in. You know, every generation thinks they are unique. My grandmother went through 2 world wars, and for her, that was absolutely unique of her generation. But what we're talking about here is something of completely another scale. The uniqueness of our generation. Forget, space exploration, forget AI. It's the relationship with nature reaching a tipping point. Science is super clear about that. We've never been clearer on the fact that if you surpass certain thresholds, global warming of the ocean, acidity of the ocean, size of forest on land, those ecosystems, those Earth systems will begin to change on their own. And there is not going to be an easy way to bring them back, at least in human scale time scale. So, those are the 2 messages. But the last message, when I finish here, of the film, I hope, is that we are also a generation that has all the tools, the knowledge, and frankly, the financial means to change all this in time, or at least in time to reduce the catastrophic impacts that otherwise will suffer from. And that's, I hope, the message of, I won't use the word hope, because it's a word I feel increasingly is this double-edged sword, because if you hope too much, you don't act enough. That's what I feel sometimes, you know. So hope because we can do it, there is a possibility, but actually hoping is not enough. We really need to change. And that's the message. And finally, you probably noticed the end of the film is a bit abrupt, you know, kind of bang. And we were told by our partners in making the film that that's the way the big movies signal a sequel. And so there will be a second part of the film, which is all about the solutions and the success cases.
Thank you. I think to start speaking about the solutions, we really need to start speaking about the economy, capitalism, finance, and I think I have a straightforward question. Let's start from Polman, please. If capitalism has, I think, to redefine its moral foundation, because its moral foundation has to do with natural capital and human capital. Let's never forget. You do refer to it in the film, but let's never forget that there is a people-positive economy that we need to build, and that inequalities are really breaking from within our democracies. So that's the other side of the planet. That's us. And Paul, what I want to ask you is, I mean, you have a great experience in managing enterprises and being at the head, at the front of this movement. There is a window open to turn back. I mean, we do know that. And we know that the accounting system, the way we calculate, we value, in fact, the way we acknowledge risks within the entrepreneurial sector is crucial. Europe has tried to frame regulations around this. Very controversial now, with right-wing culture, political culture in Europe, in all countries, even this one, trying to go back and trying to restore to deregulate. Let's put it just easily like that, to deregulate. How do you see that? I mean, how can we really fight for that regulation, which is a very precise way of asking enterprises and finance to optimize not only risk and revenue, but risk, revenue, and impact, which is really the motto of the GSG Impact movement, which I am very proud to belong to.
No, thanks, Giovanna, and obviously, I hope everybody liked the movie. It certainly rings a bell with anybody after you talk to people after you see it. And Marco said it very well. As long as we value a dead tree more than a tree that's alive, we're in trouble. And I think that sort of summarizes it. But since your 1992 meeting in Rio, and then the Rio +20 when we did the Sustainable Development Goals, a lot of things have happened. I think increasingly, sadly enough, we've seen the economic risk going up exponentially, actually, and business gets it before governments get it into their P&Ls or into their balance sheets. We've also now, a little bit more complex as it is, we're better able to measure what we're doing. So we can see what the costs are of this destruction versus the benefits of keeping things alive. That is clearer now, and it can be done from space even. Or in our own farm, we do biodiversity measurements by just going to the water, and that's pretty accurate, actually, to get these things and get rewarded for that if you move things forward. We didn't have those tools. The third thing I think is one of the more important ones is a realization that we cannot solve the climate change issues if we don't actually address nature, which is a much bigger. Climate is actually a subset of what we are talking here. You know, and for example, our food chain, the broken food chain, is becoming a significant bigger emitter than just the fossil fuel use. And then many people haven't caught up on this yet, but I think that realization is coming in. And then the fourth reason coming into that we're increasingly seeing the impacts, just at natural disasters and the cost of these uninsurable areas. It's getting to that critical stage. So I do think and I used to hope a little bit, sorry, Marco, but I am hopeful there that we are sort of at a tipping point that might be closer than we think. And it's also easier. The progress we've made, for example, with getting it to the attention of the corporate world or the financial world has been faster than the curve we went through with climate change. There's no question about it. You know, but where we are, we have to be realistic about it. Business still spends about $5 trillion destroying nature and only about $35 billion protecting nature. Governments still have, as you saw in the movie, $2.6 trillion per subsidies, which, by the way, have gone up in the last 2 or 3 years by 800 billion. So the interesting thing is that it doesn't take much to fix this. I think the bigger warning was the financial market was a good warning, as you rightfully point out, in terms of what economic system are we choosing to live in, one subservient to the financial market or one where the financial market is an enabler for what we all want to achieve. But COVID, I think, is even more, because COVID was really, we had SARS, Ebola, Zika, Asian flu, etc., but COVID as a zoonotic disease pointed out really what the cost of destruction is of nature. And that cost us $19 trillion in spending in Europe and the US, which we were happy to do because human lives were at risk. It's amazing how fast we move. And now I think there's a big understanding there that if we put humanity at the center, which business has lost, I would be the first one to argue. You know, with the focus on short-termism and shareholder primacy, I don't think it has been the finest period for business. And we need to go back for why business was created, which is to address the world's issues and sure, get profits from that to do more of addressing the world's issues. But it is for people and planet in a sense. So businesses that understand that now, which is the nice part of it, for example, in the TNFD, the Task Force of Nature-Related Financial Disclosure, you have a group of 730 businesses, big ones as well, $9 trillion of total turnover, market cap. They are voluntarily disclosing these things, and these numbers are going up rapidly. And if you look at that group of businesses that you might also argue is more responsible in internalizing it, then they're also actually getting better results, growing faster, and being valued better by the market. So I think that momentum is coming, but we just need to create more of an awareness around that and more of a story.
You think that they will be giving out these data even without regulatory compliance?
Well, so everything is easier if governments would do the right thing, but I'm a realist, you know, and in some areas we have pushbacks, in some areas we move faster. And it's actually where I feel the most comfortable myself is if you get a big enough group of people together, often the better parts of the private sector might not be as many as we want, but that's not the point here, and civil society, etc. You de-risk the political process. I just came back from Indonesia 3 weeks ago. They want to be food independent, which is a perfectly normal objective. But we had to make clear that you cannot do that by cutting down the Morocco forest, etc. Now we have identified with WRI and others 12 million acres of degraded land, and we're showing that it can be done actually cheaper, better, more profitable in a sense, but also regenerating that land and restoring soil health, protecting the forest. I was with Sylvia during that same trip. We were in Papua and Raja Ampat, where the tourism is going the same direction as what we saw in Bali, anchoring on the coral reefs, illegal mines, cutting down forests, plastic floating everywhere. You know, within a few years, nobody wants to go there on holidays anymore, which is sad because it's the best and biggest biodiversity hotspot we have in the world. And so working with them, being the government or local people, etc. It's always from the bottom up as much as it is from the top down to make an economic model work for everybody. To start with the people that live there and their livelihoods, etc. It's totally viable. We're working there now with resorts and they're willing to invest in that. We're working with industries that are willing to put blue ocean industries there and provide livelihoods for people, positive tourism, where you obviously pay for these services that you're getting as a tourist instead of destroying them, and create something that is regenerative. You know, on the fashion pact, my last sentence, and then we'll move on, but on the fashion pact, I think the fashion industry, which has been one of the most destructive industries in the world, and sadly they weren't even aware of it themselves. I think they're coming to the realization that the pressure from the market is changing rapidly, and if you're not a company that's on the right side of history here, it's very difficult. And we're calling out the CEOs that decide to be on the wrong side, you know, like models like Shein. They should be prohibited, to be honest. So thanks to the lobbying of the industry, you get the French government put them a minimum charge in of clothes so that they don't just, you know, become valueless and get discarded after two times wearing. Industry going together to restore biodiversity, get to regenerative cotton, etc. But we're at the point now that you need to create these collective efforts because it's a sort of a prisoner's dilemma. If I do it and I have to carry it alone, I don't have the time, the knowledge and the money. But if we do it together, we're all better off. And I think more of the CEOs are now understanding the value of cooperative leadership versus competitive leadership, especially when it gets to the future of humanity.
Thank you, Paul. Thank you very much. Nick, talking about collective efforts and talking about channelizing impact capital towards these systems. I mean, we could talk about food systems, energy systems, nature-based systems, and where I have two questions for you. First, if you could kind of briefly resume for us where we are after the Social Impact Investment Task Force in 2014 released the report, where we are in terms of channelizing that capital. In fact, no, three questions, so this is going to be just. Second, the challenge of impact investment is not really only towards the private sector, it's also towards the state and governments. We both have an experience in government, so we are there on both sides. And how do you see that happening in terms of public-private partnerships, impact-driven and impact-oriented? How much capital is flowing into those kind of investments? Third and last, do you see a backlash? I mean, because we have to be honest in this now. The culture and the political scene today, starting from what is happening in the US And can we, I remember yesterday, Riccardo Luna was asking this question, can we do these transitions without the US being central? So do you feel, Nick, do you know, do you have data on this, that the kind of negationist and nihilistic approach of the American government today to these issues is producing a backlash in terms of channelizing capital? I argue that there is not that backlash, but I want to hear from you. Thank you, Nick. Nick is the chairman of the Global Steering Group for Impact Investment, amongst other many things, and he's been a minister in the UK government for many times.
Giovanna, thank you so much. Quite a lot to unpack there. I'll try briefly. But can I thank everyone who's been involved in organizing this amazing week and this day. I'm a tired and cynical old politician who's been in the climate conversation for 20, 25 years and thought I'd heard. I found this morning genuinely provocative and inspiring, in large part thanks to Yuzelia and her images and the film that followed. And the conversation I had with Marcus, who explained this exhibition. I'm going to take some inspiration from it, Giovanna, because I think it's called Weaving Connections. And it challenges us to have a different perspective in a disconnected world. And the system that we're talking about, which is the system that makes choices about where the money goes, is a system that is disconnected from its impact. It is a system that has generated a great deal of wealth over time, but at a cost which we are now beginning to calibrate. And it is time for that system to evolve and adapt, and I have confidence that it will, because our success as a species has depended on our ability to collaborate and adapt in the face of changing circumstances. And when we're talking about disconnection, we shouldn't feel disconnected from this system. It's our money. Governments spend money we pay in tax, or the interest we pay on their borrowing. It's our savings. It's our insurance premiums. We are disconnected from it. I was involved in a campaign in the UK led by Richard Curtis, the filmmaker, Love Actually, For Wedding Funeral, called Make My Money Matter. And it was all about trying to engage us with what is done with our money. And people were shocked. There is a disconnect that we should try and narrow, because this system is enormously powerful, and it's not fit for purpose because it is not sufficiently impact aware and doesn't put a value or price properly factors that are material to our continued ability to prosper and create wealth. There's a flaw in the system that we need to address. So, Giovanna, your question is part of the reason why we were inspired to help set up the Social Investment Task Force under the G8 presidency of 2013, which has now become a global network across 48 countries, including America, including China, including Indonesia. 50% of those partners are in emerging economies. We have another 24 countries looking to join this. This is a community of institutions, not individuals, who want to collaborate in trying to create the conditions in their country where more capital can flow towards assets, activity, programs that generate a measured positive impact alongside return. You know, there may be some trade-offs depending on mindset, but the principle is return plus positive impact with intentionality. But the reality is all investment is impact investment. It's just we have failed over the past to distinguish between investment that has a negative impact and a positive impact. And we have to change that, and we have to change our systems to place a higher value and a higher priority to the investment that has a positive impact and sets out to have a positive, because it is more valuable, because it is doing more to sustain the prosperity of our fellow citizens. And to your last question, the money is beginning to move. It's too little. We measure it in maybe a couple of $1 trillion, which is what, maybe 2% of the flow. So it's, but we have to change the whole system. It's about all the investment and making it more accountable for its impact. To your final point, is there a backlash? visible in the United States. I was worried that it might be contagious in Europe, but I think it's under control. The backlash is simply a message like, saying, look, the business of business is to maximize profit. The business of investment is to maximize return. Everything else is woke nonsense. I think that fails to understand the reality of the modern world and the current landscape of risk and opportunity. My sense from institutions around the world is actually they recognize that the world has changed. They're operating in a different world of risk and opportunity. I'll give you a final example. We convened through GSG a series of workshops around the world to talk about investment in adaptation and resilience. Frontier space, not very well developed. We didn't know who was going to turn up. China, Australia, Brazil, London, Indonesia. And over 200 asset owners and managers came to these work tables, trillions of dollars under management. And I was very struck. They didn't come to discuss why invest in resilience adaptation, including nature-based solutions. They came to discuss what and how. So, I took from that there is an appetite out there to shift perspective, to shift priorities. And how can we drive this further? Regulation, the stick, is one, and driving greater accountability for impact is one, but we also shouldn't ignore the carrots and the ability to structure and create opportunities to invest for impact by putting a value on natural ecosystems, for example, and doing much more, as the film suggested. But when we get into conversation, the stick, yes, but let's not ignore the carrot. Yeah.
Thank you. Bertrand. Bertrand has a long experience at the World Bank, former CFO, and has established recently, not so recently, some years now, an impact fund, a very important impact fund called Blue, Like and Orange Sustainable Capital. So my question for you is, again, also I want your opinion on the backlash issue, because you are out there searching capital, and I know that's not easy. And we want to be concrete. We want to be very operational. With Human Foundation, we advise impact funds in Italy and in Europe, and I wouldn't say there's a backlash, but there certainly is not the same hype that we experienced when we were born 15 years ago, to be honest. It's not really reversing, but it's definitely not having the same pace and acceleration that is needed given all the data that we know. So, Bertrand, for you, the question is, first, what is your opinion on that? Second, your fund is established in France, so you are within the European regulation framework, which has identified even financial tools in terms of more or less sustainable. How is that regulation helping, not helping? Is it just the batons and not the carrots that are out there in Europe? And final, in fact, this is a point that I would like all of you to discuss, because I see a very important role, a leverage role for, in fact, yesterday, Jeremy Rifkin acknowledged this. I don't know if he's here, but yesterday he mentioned very clearly that to channelize that kind of patient, long-term stakeholders, interest capital, we should call into the arena pension funds and institutional investors, insurances and pension funds as leverages for this kind of capital to flow. Do you see that happening in Europe? Bernard?
Okay, well, thank you very much for the invitation. And like my neighbors, I must confess that I had a wonderful morning for many reasons, and for a very personal one. I called my fund Blue Like an Orange, and many people wonder, it's a very weird name for a financial company. Why Blue Like an Orange? Not just because it's easy to have an orange scarf or the navy blue as a mnemotechnic mean to remember, but I called it because it's after a French poem, so there was a discussion on the poesy, after a French poem from Paul Éluard, was a surrealist poem, the best friend of Pablo Picasso and Salvador Dali, etc. He wrote this poem in 1929 at a time where nobody had a clue that Earth would look blue from the sky. I don't know what he smoked when he wrote this poem, but he said Earth is blue like an orange. And that's the link between the presentation we had on Earth seen from the sky, Earth seen through poesy. And for me, this is this image, and I used it because I wrote a book on water 25 years ago, and that's how I started the book and say Earth should have been called ocean because it's blue like an orange. So it doesn't mean anything, but my point is, my point, I'm very serious, it's like this vision of Earth suspended into the universe, in the black, in the vacuum, is super rich like an orange and also super fragile. And that's really what I feel. And that's why you really made my day, Giovanna, and I'm really grateful. So I often say, and I come back to your question, but I often say that I have two jobs today. My day job is to run Blue Like an Orange Sustainable Capital and to demonstrate that even if the system in which we operate is not perfect, we cannot use the system as an excuse not to do anything. You still can do Blue Like an Orange. You still can do what we are doing today, so don't hide yourself behind the system. You still can do things. So that's my day job, to demonstrate that even if you have all the adverse circumstances you describe, you still can do something. And the night job is to say, well, if we could change the system, that would be easier. And that's where the real question starts. Because the reality is that when people, I mean, the pension fund or insurance company come to me and say, shall I invest in Blue Like an Orange? One of them told me, okay, I'm taking the financial return and the impact is a bonus. It's free. It has zero value. And that's a problem, because our system does not value any of these things. It doesn't prevent you from taking this and putting a nice paper in your annual report with a nice picture, produce nice movies, etc. But it has zero value. And that's why I think we have to address, to revisit three questions that actually have been addressed 50 years ago, which are at the heart of our conversation. In 1971, Nixon suspended the convertibility of dollar into gold, and basically he put the market central to everything. That's where the values are decided. Today, a dollar is worth X euro, a euro is worth Y dollar, and it's changing every day. And it's true for gold, it's true for oil, it's true for chips, it's true for everything. And we live with the market. So market is central. 6 months before, Milton Friedman, in a very famous article in the New York Times, September 1970, questioned the role of corporate. And he says the social responsibility of corporate is to maximize profit. And interestingly, 1st of October 1972, the Club of Rome put the question, can we grow indefinitely in a finite world? So at the turn of the 70s, we give a question to the role of the market, we give a question to the role of corporate, and we did not really discuss the role of growth. And that's the question that is basically backfiring today. And that's the question that we need to address, to a point that the system that was put in place at that time, I mean, I've been a CFO, you call it mark to market, meaning that every accounting from every company in the world is marked to market value, meaning that every 31st of December, you value your company as if you were liquidating it. You take the value of each asset and you say, if I had to sell it today, that's what it's worth. The future is not part of the accounting of the company today. And that's really where our system is. So it doesn't prevent you from being a good company and doing good things. But as I said, as a CFO, for 364 days, you can say whatever you want. But on the 365th day, you're back to the accounting standards. And that's where I think we have to really address these questions. And as long as we don't address this, we run the risk, and this is a conversation we have had with Giovanna and Paul in particular, is impact something on the side, or is impact willing to reform finance? So are we satisfied that we give a little bit of money to impact and we say, I feel better because I've done some great positive things, I've done some great ocean stuff, etc., like an NGO, or like you give money at the mass for the collection and you feel better? Or do we seriously want to change the system? And that's coming back to your point. This is a crossroads where we are. On a way, it's very comfortable to stay on the side, and people are satisfied. Even pension funds, they will be happy to give a little bit of that. Or are we fighting to change this?
Diversify portfolio with a 10%.
Yeah, no, 10% would be great. I mean,
great, it would be
yeah, I think we're 0.1%.
Okay.
But so my point is really we have to change this market system to what I would call mark-to-planet system. And that's why I come to your question. Sorry, it's been a little bit long. First, and I think it's an important one. You said, is it a backlash? Yes, to a certain extent, but it's more than a backlash. It's headwinds. The fact that we have to put more money into defense and AI, I mean, that's what people tell me. I have to put money in defense and AI, so I put less in climate and nature. It's not necessarily a backlash. It's a conflict of priorities. So it adds up to the backlash. And so you have all these things which makes these things confusing, and the fact that we have, in a way, tacitly admitted that it can be on the side. So I think we have to keep the fight central. It's about changing accounting principle. It's about changing governance. It's about changing compensation policy. It's about changing finance. As you said, it's not just risk, return, and impact. It's not that complex. I mean, we have plenty of tools to calculate this. So I think this is really at the heart of it. So we have to, but we have not to be naive. We have to recognize that when you face an investor, he has his conflicting priorities. You have to help him make the decision. Not to say, guys, my thing is a priority. He will not listen to you. So that's my point. The EU regulation has been a mess. I mean, I'm sorry, I've been pushing for it. It's very difficult to understand where we are today.
Even though they introduced the asset class of impact investment recently, how do you see that?
Well, coming back to my point, it's a positive and a negative. It creates a little box where people feel nice. So it's a way to kind of disconnect the whole conversation and say, we've done it, it's okay. My point is that when you say there is an impact finance, you admit that there is an un-impact finance. When you say sustainable, it means that the rest is unsustainable. When you say green, that the rest is not green, etc. So you enter into a conversation that we have to break. So of course, it's a good starting point. It's great to put things on the table and recognize that it does exist, but it should not be a way to kind of abandon our responsibility. I think that's really important. And all the more I like the call to say there are trillions of dollars available for this, etc. That is true, but these dollars are not moving. I mean, when you allocate money in a pension fund, in an insurance company, I mean, you change the percentage by a few basis points every year. So I'm a little bit, on the one hand, it's true that there is money available, but I wrote a report called From Billions to Trillions. So I feel extremely guilty, and I had this conversation also with Mark Carney, with the G-Fence, when he said at Glasgow there's $130 trillion available. We popularize or we socialize the trillions, and we give the feeling that there were trillions floating around and just have to capture them. It's not going to happen this way. So we have to be more imaginative in mobilizing this money. Repeating again and again that there is money available and can get it is not sufficient. So we have really to move to demonstrate that impact and profitability go together. And we have to continue to work on making impact a real stuff, not just a bonus or a free gift that you give to the investor on top of his money. That's the fight of our life, and I think it's absolutely aligned with your big, great awakening, etc.
Marco, you wanted to add something on the backlash?
The backlash. Can I be, it's all recorded, right? But doesn't matter. I'm going to be super direct because I think the backlash there is, and is huge. And let's stop in Europe talking about Trump, because that is a psychotic egomaniac. In Europe, it's much worse. Because the backlash in Europe, the deregulation in Europe, this dismantling of all the legislation that made Europe a leader on the environment is approved by the parliament, not by a crazy leader. So this is serious, friends, very serious. And my heart is bleeding because I've been, as many of you, engaged in the building of this legislation. And I have to say, open bracket, maybe we went too far. And definitely the EU bureaucracy has made things too complicated in their regulation. And we offered on a silver plate the opportunity to talk about simplification. This is not simplification. This has been watering down on the ambition.
This is deregulation.
This is deregulation. Now, the question is, however, is not the backlash happens or not happens. Why? Why we are deregulating on things which we all increasingly understand are fundamental to our resilience as society, as individuals, as families, for our children. I mean, all this is so clear today to so many more people than ever before, yet deregulation happens. Yeah. Let me be blunt in my final comment. Deregulation is happening because we are, and I'm going to catch Paul's quote, which is also my quote in many speeches, an Italian philosopher. He was also the founder of the Communist Party, which is not particularly popular for many people, but this is Gramsci, Antonio Gramsci. They wrote, "The old is dying, the new is not yet born." And that's the moment we're in. The old, we understand, is not going to deliver any longer. Inequality is growing, the environment is destroyed, and the list goes on. But the new, the alternative, is not that available yet. It's not that persuasive. It's not convincing that that future, renewable energy, regenerative agriculture, is going to be a better future. And that gives the hand to two, let me call them out, two big sectors in our economy: petrochemical and agrochemical. Those are the two sectors today that are fueling the feedback because they don't want the change. So unless people begin to raise up and stop voting for this parliament in Europe that is elected on a completely different set of priorities, but they're using their power today to attack the environment because the only thing they can do, because they are failing on everything else, people need to change. And I have to say, I'm beginning to see the wind of change happening in Europe, which is exciting. Starting for the president of the region here in Veneto and the mayor of Venice that just been elected, which are, I would say, yesterday their speech was a breath of fresh air as Italian.
Good, thank you. I think we have time for another round of quick contributions. I would like to go back to Bertrand's consideration on how it all started. I mean, I'm trying to bring you all to a more macroeconomic level, which does not mean, Marco, that you're very right in saying there are some sectors that are pulling down and slowing the process. But let me say it this way. Bertrand reminded us of the 1971 decision by Richard Nixon, and how dismantling the Bretton Woods system few years before the so-called neoliberal Chicago boys economy became the mainstream and the main street way of capitalism to work. So I mean, I'm an economist, so I'm really interested in understanding, because if there is a way capitalism can save itself from itself, because one thing I believe is that we are like between the idea that we cannot do anything about it, that the force not of nature but of finance is the strongest. It's you know, it's self-recurring, following revenues and risk management, but definitely not evaluating impacts, positive and negatives. And on the other side, we have strong, understandable criticism to capitalism as such. And I see that as a very disturbing alternative, because I don't see that as an alternative. And I think that if we want, and by the way, this also has to do with how we want to save democracies. liberal democracies. Liberal democracies and democratic capitalism go along with each other. And if one falls, the other does too. So for me, there is an issue of going back to the engine and to the structure and to the civic project of capitalism. And not, I agree again with Bertrand, and also Nick mentioned it, not just as a side little pocket of finance and of money. Because I don't think that when we created with Ronnie Cohen and with many other institutions all over the world the idea of impact finance as a driver, we didn't think that it had to be even a $3 trillion pocket. I mean, that's still too little, given all the transformations that are needed. So for me, this is the question: how do we understand that there's not one capitalism? There are many historical and societal forms of capitalism. We had leaders like Delano Roosevelt that in 1933 invented the social welfare and the New Deal. That was an invention for me as important as penicillina in the structure of our history. So I think this is the kind of ambition and the kind of reflection that we need to do. How do we acknowledge the fact that there is not an alternative to capitalism, but this short-termism, shareholder-oriented, nature disregarding, and also, if I may say, socially disregarding, because we should never forget this. It's not just, ideologically saying climate justice. I mean, the injustice and the, inequalities that have grown so much since the Chicago Boys economy won. The ideology, the philosophy, the culture, and the political. How are we going? And I was in the Progressive Coalition. Nick was in the other side, but we all are facing with the same urgent transformation of the economic model. So I'm going to stop here. I'm not going to take the word anymore, and I'm just going to ask you to react on this as a very general, but I think crucial issue.
Well,
Thank you. Thank you.
I think as a first point, your last comment, Chicago won. I think there's more awareness now and realization that it isn't actually. I believe that ultimately a system that works increasingly only for few and not for the many will ultimately rebel against itself. People just won't accept to be excluded or to not be fairly treated on this, and this is what you're seeing. Unfortunately, it gets expressed in the polls, and we're creating extremes, which are basically desperate attempts to find alternatives, but that awareness is there. I think we need to first look at the human level, because at the end of the day, it's us that vote for politicians and can make an influence in what we do and how we live, and don't underestimate that. But, what has happened is two things. On the financial side, I think what Bertrand has very well explained, but we have just freed up the financial instruments to an extent that we now have financial instruments in this world that are 2.5 to 3 times more than the value of the real economy, and they're all chasing returns, So they will go where the lowest risk and the highest return equations are, and we've made it easy with a lot of quantitative easing. I think a lot of it happened under Clinton when the liberalization of the banking sector and moved away from what real banking is, So that's really where we as CEOs always had to deal with. It's not necessarily short term, because at the same time, these pension funds were, it's right that there are 70 trillion, 80 trillion dollars there, but they've become sort of index funds. They've removed themselves from the real economy by basically being sleeping investors, as I call it. They're not really actively involved anymore. But they're getting increasingly worried that they don't get the returns from the short-term focus. and increasingly worried that they're representing people that are going to retire in 20, 30 years, and they're asking themselves, what is the world we're going to retire in? And that responsibility is coming through. On the human side, we've lost touch between each other. We think we're more connected because of the internet and everything, and give each other little love marks, but the average American now has only one friend. In the UK, they had a minister of loneliness. We just don't know anymore how to talk, and then we live in concrete cities, 70% soon, that is completely detached from nature. You ask an average kid in school now where a cucumber comes from, or what the difference is between a cucumber and an aubergine, won't be able to answer that. So we've lost that. So we need to bring that back in education, into humanity, and bring humanity back to business. I think that can be done by all means. But don't expect the change to come from the financial market. I think we have, because I think there's just to work the value set of the financial market right now, and I'm not trying to be cynical, but to work the value set of the financial market will take us longer than the time we have to address the issues. So what we need to do is we need to show that there is a different value equation. We have created $12 billion of impact funds that we basically invest behind these nature-based solutions. EQT Future Fund, a Systemic Capital Fund. I'm one of the co-founders of the TPG Rise Fund. So, and every fund should be impact, because every dollar you spend is actually a vote on the future you're deciding to have. And that realization needs to be much stronger, but it won't come from the financial wealth. But if we keep showing that the things that we invest in, or the opportunities that we create, are very investable and are worth it, the money will start flowing. There's obviously, you have to get rid of perverse subsidies. Obviously, you have to have clarity from governments. Obviously, you have to have policy that works and all that stuff. I understand that that makes it easier, but don't be naive. It's just not coming at the speed we want. So get enough of the critical mass of the private sector there to show that these are very profitable investments. And when the cost of inaction is now significantly higher than the cost of action, it becomes a very, very attractive proposition. Nature-based investments have a 14 times return on investment on average on all of the projects that we've looked at. So we need to get that awareness up. We're dealing with a moment where the CEOs are being pulled back to the short term because of these perpetual crises that have been created. You know, if you were asking, rightfully so, do we have a backlash? We have a backlash, but I always say at the same time, we don't have a backlash in the sense that we're going backwards. We're not going backwards at all. We're actually going forwards, but we need to go faster. So the best thing we did with Unilever, not to talk that too much, we moved to 95% sustainable sourcing because I could see that that was needed. We decoupled our growth from environmental impact. We provided living wages, created gender equality, fought for human rights and all the other things, but we got a 300% shareholder return over the 10 years. That's why people changed, because they said, why are they so successful whilst they're doing this? So then you get it on the radar screen and you create that momentum. So yeah, I don't debate capitalism, to be honest, because I think it's useless to and I was in Chicago the other day to debate if Milton Friedman was dead or not. I think I won that debate because I convinced him he was dead. But you know, the word capitalism doesn't mean anything other than we need to create a system that works for everybody, including future generations. And that system doesn't actually have to be the same, because that's based on a value set that you have. You know, you take the Chinese right now, you look at their 15th five-year plan right now, you know, there are positives and negatives in there, but I can tell you, it's pretty nature positive because they figured out that they can't grow their economies if they don't take care of that. They had degraded all of the land. They didn't have the access to water. You look at their energy plans, it's pretty positive. I mean, they will beat their targets from 2065. They will get to the 2050 before all of us do. In fact, they're converting the world right now because they see that's an economic necessity. Why in their system? Because if they don't grow the economies, the people are not going to like a one-party system anymore. It's as simple as that. So, but is that capitalism? Is that not capitalism? I don't give a shit, to be honest. As long as they address the issues that need to be addressed, so that we create a world that is more inclusive for now and for future generations. And I think we have enough elements there now to hang ourselves on. We just need to get together. When Andhra Pradesh did 1.8 million farmers, mainly women, and converted them to regenerative agriculture, they decided to go for 8 million and do the whole state. Now you have 24 states in India that want to do the same. We need to pick up on that and say, what is the equivalent for Africa? And convert one at a time, at a speed that is a little bit faster. If the financial market comes behind that of scale or not would be easier. But the most important thing is that we create the projects and show that they are investable.
Thank you, Nick.
Oh, it's been a good conversation. I think it's important to make a distinction between political cycle and structural trend. There is a political cycle that is unhelpful at this moment in time, which we have to understand. But I think the structural trend is in the direction that we're discussing this morning, because the world has changed and business decision makers are now living with a real business risk around climate instability, for example, that needs to be managed actively, and I think that is recognized. So in the States now you hear the expression green hushing. They're just doing it, but they're just talking about it less because they recognize that it's a business risk change. So I think distinguishing between cycle and structural trend is important. In the meantime, I think to your point about pragmatism, there are still very valuable things we can do to correct the fundamental failure, which is a failure to put a value on impact. So as you know, Giovanna, the network we're part of has been instrumental in driving towards impact accounting and impact valuation, published a whole set of valuation indicators, for example, around the real costs of water extraction. And we are hopeful that this month, these first valuation factors will be published on the terminals of the biggest data provider in the financial markets. They will only do that if they believe their customers want the information. Demonstration effect is really, really important. You can move the money. You talked about social investment, quite rightly, to your great credit. In the UK, through a collaborative effort, to Paul's point, of government working with the private sector, we have created a new market from nothing that is now worth $13 billion of social investment. This is capital that is looking to combine return with measured social impact, and it's money flowing into homelessness, keeping children out of care, keeping people out of prison, building affordable homes that didn't exist before because of a concerted effort between policymakers and the market to align incentives, to create the institutions to be catalytic in creating a market. It can be done. It's really hard work. It's really difficult at the moment, but there is demonstration effect. Bertrand is providing demonstration effect in the institution that he founded, hopefully, no pressure. So demonstration effect, proving what's possible, I think feels very important. And then my third and very final short point is a message of hope. Let's not lose sight of the fact that against this conversation is happening the biggest transfer of wealth, generational transfer of wealth in our history, of money flowing from the baby boomers to a younger generation. We have, I think, confidence to assume that there will be a different set of generational values that will be in charge, that will be guiding the decisions about where the money goes. We have to not be complacent about that. We have to double down on inspiring, engaging, encouraging that generation. But power is shifting, hopefully to a different value and mindset in the younger generation who understand this. And that's $80 trillion.
Thank you, Nick. Bertrand.
Thank you. It's been a very inspiring conversation. I think the first thing that I would push is to make people feel that what we've discussed is not cast in marble. What has been decided 50 years ago is not forever. I mean, capitalism keeps evolving. We should not be shy to discuss the assumptions. We should not be shy to discuss the consequences. We have the right to challenge this. A number of people say, I mean, there is nothing I can do. No, it's not the 10 Commandments given to Moise 3,000 years ago or 4,000 years ago. It's not that old, and we can change it. So I think it's very important. Second thing, there are 3 signs of hope that I'd like to share with you. First, COVID. It might be a little weird to quote COVID as a sign of hope, but if you remember where we were in March, April 2020, the morale of everybody on Earth was very low. And the reality is that we hit the wall, and suddenly we found money, and suddenly we found a vaccine. Of course, it was not perfect. And interestingly, I was living in the US at that time. Trump was the first to say we got a vaccine by the end of this year, whereas the European leaders say we have to wait 3 or 4 years. So when we hit the wall, we are capable of great things. The big issue is that when do we feel that we've hit the wall that was described in the movie? That's a big question. But we know that when we hit the wall, we are capable of great things. And two more signs of hope. First, interestingly, they both come from America. The crisis that we are facing, or the war that we are facing in Hormuz. It's very interesting because suddenly people realize that we cannot depend on a system which is basically linked to a short strait and few countries. And so people realize that if it's not for fighting climate change, it's to fight for sovereignty, etc. And nature positive is a perfect answer for that. So maybe it's a trick of history that we are living, that Trump maybe is an ultimate sorcerer apprentice, and basically he will have an unexpected outcome from all this that will accelerate. And to a certain extent, I was not expecting that 1st of January 2026. But now I think this is a possibility. When you discuss with people, they want to move in that direction. And the final one is the Pope. When he published his encyclical letter last week, I say, basically the choice we are facing, it's true for AI, it's true for nature. Do we go to Babel? Basically, and finance and technology are the ultimate single language that we use, dollar and 10001. So do we go for Babel and we try to go to heaven and we collapse? Or do we rebuild Jerusalem by combining forces? And I think it's an amazing parable, an amazing vision. And I think we have to rebuild by joining forces, not by opposing one to another.
Thank you. I would like to wrap up this conversation, which has been wonderful. Please, a round of applause for all of them. I would like to just end up even honoring the place where we are, thanking Mark and Francesca, with a final consideration on the emotional side of all of this and the art role of all of this. Because I think we need to sort of connect the different panels we had this morning. First thing I would like to say is that neuroscientists are now very clear in telling us that we think because we feel. The kind of rational thinking, which is very valuable, I'm not underestimating rationality and science, Ercilia, at all, but that kind of attitude, of thinking, the rational, always is moved from emotions and feelings. This is quite new in neurosciences. It wasn't so clear when Kant wrote his the different ragioni of Kant. So I think that that gives us, and I really want to go back to what Paul just said, the idea that values, which are emotionally driven, are so important for the capitalistic revolution. I still want to talk it that way, but I understand what you say. Let's talk about the values undermining the institutional framework of the different forms of the economy. And the second thing, again, Mark, thank you so much for having us here. This is a wonderful institution, is that, and I talk here with the other hat I have on my head, as former culture minister and somebody that has been working in culture for many years, artists are very often prototypers of futures. They see ahead, they feel ahead. So the fact that this Climate Week, I don't see Riccardo anymore, but I don't see oh yes, but I see Cristiano. So he is the fact that this Climate Week has kept together prototypers of the futures, our emotional way we think, and a very, how could I say, maybe boring, but you know, strictly financial and economical panel on these transition. I think it's very important. And thank you all. Thank you for being here.